Mortgage market could be on the brink of a collapse. Diana Olick joins us right now. She's got that story. And Diana, this is pretty concerning. What are you hearing?
Absolutely, Becky. On Saturday, a broad coalition of mortgage and finance industry leaders sent a plea to federal regulators for desperately needed cash. Requests from borrowers for the federal mortgage forbearance program are flooding in at an alarming rate. Services are granting those monthly payment deferrals with no questions asked as required, but the servicers still have to pay the mortgage bondholders. The coalition, headed by the Mortgage Bankers Association, said the scale of this forbearance program could not have been foreseen by mortgage servicers or fully anticipated by regulators. It is therefore incumbent upon the government to provide a liquidity facility for single-family and multifamily servicers. Any further delay could lead to greater uncertainty and volatility in the market. Now, I spoke with Jay Bray, CEO of Mr. Cooper, the largest non-bank servicer in the nation, with close to 4 million mostly government-backed loans. It alone has already granted over 80,000 forbearances, and there are more coming in. Bray helped regulators to set up the plan himself and was told there would be federal cash for servicers, but that never made it into the final act. He says without it, quote, there is going to be complete chaos. Servicers will go under, leaving even more borrowers in the lurch. Dave Stevens, who headed the FHA during the subprime crisis and was a former CEO of the MBA, said borrowers should have been required to show at least some proof of hardship, which they had to during subprime, and a liquidity facility for servicers is vital. Quote, this is a crisis so easily correctable. The administration made a huge mistake bringing moral hazard in and thrust extraordinary risk into the private sector that could collapse the mortgage market. Both Stevens and Bray say it is already much harder now for borrowers to get new loans or refinance old loans because of the incredible risk suddenly hitting the mortgage market. Back to you guys.
Hey, Diana, this is a huge issue. I mean, I think what we're talking about is it makes a lot of sense to say people who have just lost their jobs because of the coronavirus and the economic shutdown resulting from that shouldn't have to pay immediately. They should get a pause where you can say, OK, we're not going to pay. We'll pick up with these payments as soon as everything comes back to normal. You kind of have to keep following that up the chain of command, up the food chain, to say who in the end ultimately has to bear the brunt of this. And it seems like the government is the ultimate backstop on every one of these. Same thing with small businesses saying, OK, I don't have any money right now, so I can't pay my rent. So that kicks it up to the REIT, who says they need to get bailed out with this, too. I don't know how you possibly put enough money around all of this, but it does seem like the federal government's going to be the only backstop on any of this when it is the one issuing the orders saying the states should be shutting down.
Right. And the system needs to keep on going. And you're right. Even Jay Bray said he didn't disagree. Again, he helped set up the plan for forbearance. He doesn't disagree that people should get that forbearance, that 3, 6, 9 months of payment, not holidays, but they'll pay it at the end of the loan. But it was interesting. I asked Mark Calabria, the head of the FHFA, last week what Fannie and Freddie were going to do, why they weren't providing this liquidity facility. And he said, well, if it goes more than 1 or 2 months, we might consider that. Well, how can you say it's not going to go more than 1 or 2 months? Borrowers are going to need this for several months more. He was saying he expected 2 million forbearances by May. Mark Zandi put that number at more like 25 million coming up over the next several months. So really, they are going to need this money coming in because you have to keep the mortgage system going, even if borrowers can't pay.
Well, Fannie and Freddie, I think, have their own issues. Their regulator said over the weekend that if this were to go on for more than 30 or 60 days, and you saw more than 25% of borrowers ask for any forbearance like this, that they would be facing some big issues, too.
Exactly, and that's why they need the liquidity facility. They need the government to step in. They're already doing that with FHA. Ginnie Mae is providing that liquidity. That was news on Friday, but really that's not the bulk of the mortgage market right now. And you also have private label, which is going to be, it's not a huge part of the market, but it's going to be in trouble as well. They need to start pumping money into the servicers so they can just keep the system going.